With a trick and a treat, October is closed. So let's take a look at the monthly. Let's go. Before we get into SPY, let's look at a few others. Let's start with US 10Y yields, and we can see it at their highest level since the past 16 years. Is this maybe an area of resistance? So therefore, it stands to reason that bonds, TLT, are at their lowest value in the last 16 years as well. And the VIX. You know, the thing that everyone keeps saying is broken due to zero DTE options is below the danger zone of 20, but it appears it's found some footing. The IWM is looking weak, and if we zoom in here, we see that we're wicking right at areas where we've wicked before at and encountered areas of support, but it is below all of its moving averages. The Qs, however, are looking strong. You can see that we kissed and came pretty close to that 200-day simple moving average. But, for the most part, we're above all these moving averages, the 13, the 5, and the 20. So it's still looking healthy. So let's spend some time looking at SPY. But first, if you're finding this helpful, then go ahead and subscribe to be number 200. First of all, you'll see that these boxes here represent gaps that existed on the daily chart. And if I were to zoom out on this and put it into log scale, you'd see that, we've had quite an epic bull run here. And now what I'm assuming here is that we're going to go into a regular flat ABC corrective wave. And typically these regular flats have a 3-3-5 structure. And we're not going to get in here and debate the 3 or the 3, but let's just assume that we have that, and let's talk about the 5-wave structure here. Now, one thing about regular flats is typically they do extend below and they finish below where they finish the A wave, but just for simplicity, I went ahead and considered that we closed the C wave where we finished the A wave. Again, there's like dozens of corrective type waves, and I'm not going to get into all those. This was just for illustration purposes. So let's assume for now, going into the Fed meeting, that we did hold the 20 SMA here on the monthly, and we were below the 200 SMA daily. But now let's just assume at this point that we're in a pivot low. Now, that could change as of the meeting. Maybe he says something that completely shocks everyone and we head lower and we have not finished this wave. But for now, we have broken the downtrend. I'm not going to get into all that on the daily. Let's just assume that indeed has occurred. Well, if that truly has occurred, then that means we're going to be putting into a corrective wave. This corrective wave could have a minimum of a 50% retrace, but there's no reason why it couldn't be a 65% into the golden pocket, or even 100%, or even more. I mean, the reality of it is that we may not be in a corrective wave. We may have never finished this bull wave, and maybe we're going to go ahead and put in the last bit of the bull run before failing. So right now, I'm hearing those sleigh bells ringing during a Santa Claus rally going into Christmas. That doesn't mean once we finish that we're not heading lower. In fact, if we are still in a corrective wave, you'll see this 5-wave play out. But for now, this is why I'm going to buy the dip in this area and run this into Christmas. Because once this takes off, it'll be impossible to get back in. If you want to see why I thought we're at a pivot low, then watch my video from Sunday as I got it right over here. You can click on it. And again, if you want to see all my signals in real time, then join the Discord for only $5 per month, and you'll get my feedback as well. As that's all I have for now until the next video, and we'll see you then.